Can you tell me if you got me and you hear me? Morning, Dale. So one thing I am going to do is I am going to backtest this theory. Okay, so let's do like this. Next cell, date. Led to trend. Okay, so the theory that we're going to be backtesting today is the red boxes are 9 o'clock to 1600. We can see that two things happens. Either does a V shape and puke, V shape and puke, V shape and puke, or does a trend, right? So what I want to do is I want to backtest time of reversal. All right, so what we're going to do is we're going to say if the 930, let's rewind just a little bit more. All right, following this with the box, right? The moment we breach the 930 to 1030 midpoint, does it indicate a V shape for the 930 to 1600 session? If we don't breach that 930 to 1030 midpoint as it's developing, does that indicate a trend day? I've got to figure that out. And so that's what we're going to be doing today. So right now we are going to put on the stuff we need. Okay. So we start with this 930 right here. Oh, that's a 3. Okay, so let's fast forward it. So this will be the 5-minute chart. This will be the 15-minute chart, right? And like I said before, we are going to log if following the 930 midpoint, the 930 to 1030 range midpoint indicates a trend for 930 to 1600 versus a V shape, right? And when I say V shape, it can be up or down. Like this is a trend right here. This is a trend right here. This is shit. This is a V-shaped puke. V-shaped puke. V-shaped rip. Trend. V-shaped puke. V-shaped puke. That's what we're trying to figure out. All right, so let's fast forward. $8.30. $9.30 started. Breached. I'm going to turn off cap. No, no. So let's rewind a little bit. Because I want to say, so this is it. The midpoint's right here on the 5-minute. Breached it. What kind of day did it lead to? A reversal. See the white line? That's the breach. The white line is what we're paying attention to. Does that lead to a V-shaped puke? And so in this case, yes. And then you can see what kind of day we had. Deep retracements and not really a trend day for the New York session. Okay, so on our Excel, we're going to put the date, 16 July 24, led to trend in a no time of reversal of the midline being breached, 9:40. All right, moving on to the next day. So like I said, we're doing a back test session. And that back test session says if, motherfucker. So this is a 9:30 candle, right? So the midpoint's right around here at 9:30, and then obviously it extends. So it was breached at 9:35, and did that, and it got breached again right there. Did that lead to a trend day or a V-shaped puke? So that midline got tested right there as it was developing, got breached right here, so 2 times. So this day, 17 July, no, 9:40 reversal, 1.53%. All right, moving to the next day. Another thing that I want you guys to pay attention to is like we couldn't return to the London midpoint or the Asian midpoint on this day. So when we reversed that midpoint as it was developing, we cannot get back above the 9:30 to 10:30 midpoint as it's developing, that would tell you, like, don't try to long. All right, next day. $9.30 opens. Midpoint is right around here, and it continues to develop the 9:30 to 10:30. Now it's right here. Now it's down there. Now it's down there. Now it's down there. Breached. And we had a trend day. And that was with this midline being breached, the white line. And it stayed outside that range. All right. 1.9. What time was it breached? 9:50. Yes. Yes. Trend day. Yes. So the 9:30 to 10:30 midline, even as it's developing, is something I use as an indicator to tell me, right? So this is the next day. So I'm paying attention to this midline, and then the open price at 9:30. So I usually have this time cluster indicator that will tell me, and it doesn't work in replay mode, but it'll tell me like, are we above 9:30? Are we above or below the midline? Like, where's momentum at? Right. So this one got breached at 9:40. This is becoming a typical trend. Did that predict a puke or a trend? And then did we close strong on the day because of it, or did we retrace back into the initial balance? $1.43. This is 19 July. Breached. Yes. Trend. Yes. Time of violation happened right here. 9:50. All right, moving on. Morning, Jeremy. Morning, Jerry. Morning, Jonathan. Stop it, you. Okay. So this breached. 9:55. Swipe before it. All right. So do you see how that midline got breached here as it was developing? Got swiped through 1, 2, 3. Didn't trend in either direction. Ended the day inside of the 9:30, 10:30. This is Monday, 22nd. Breached, yes. First breach happened 10 o'clock. Trend day, no. Yeah, definitely, man. So like I said, there's two things that I pay attention to, very, very detailed, right? That leads to my decision making, because we know that these red boxes are 9 to 1600, and I'm preparing, and I always have to prepare myself. We know that that 9 to 1600 is less likely to do reversion of the mean behavior than from 930 to 1600, than from 1800 to 930. 1800 to 930, more likely to get reversion of the mean behavior. 930, specifically 945 to 1600, right? Which is why I have this on the 15-minute chart, right, to indicate the direction of these 15 minutes, the highs. Like, so once this 15-minute gets breached, the probability of this 15-minute being returned to, like, trying to pay attention to that, right? And so during the 9:30 to 10:30, yeah, I'll take trades all day long. That's to start positioning based off of the risk, the market condition I'm seeing, using the right risk profile, because ultimately these are the days that pay the bills, right? So like these are the build cash flow off of reversion of the mean behavior, but these are the ones that lead to my compounding growth. So when the 9:30 to 10:30 is developing, I'm paying attention to the opening price, which is right here, the 9:30, and then that midline as it develops, to see if it indicates this kind of day. Because like I tell you guys, there's always one good move there's plenty of good moves that happen throughout the day, but there's one. Remember, the daily candle has this going for it. My job is to identify when I'm in the body of the daily candle to capture that, right? And so it's one of the reasons I created Captain Backtest. This is one of the reasons, because I'm trying to capture that daily candle distribution. So breach, nope, not breach. Now breached. Red bar, close below, breached at 950. Go figure. And then we sit there and swipe back and forth, and we have a bullshit day. No trend. All right, moving on. Dale, yes. Now don't get that confused with the direction. So right here, if you look at this, we come down, right, to revert to the mean to get rid of all of these probabilities up here. But the first move down was to get rid of these probabilities down here, right? So this was a reversion of the mean day that turned it into a trend. This one, we went up to get rid of the probabilities up here, to revert to get rid of the probabilities down here, right? So the reason the 1800 to 20, or the 1800 to 9 o'clock has high probabilities of that 15-minute candle getting returned to you once it breaks out to the other side, right? Is because it usually happens during the firecracker that happens between 9:30 to 10:30, right? So like this day, for example, probability, 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 firecracker, and it wipes out all these probabilities. This is why like these 15-minute candles have high probabilities. Once they break to the downside, the probability of them getting returned to is so high because like there's a firecracker effect that happens during the 9 o'clock to 1600. Does that make sense, Dale? Okay, let me log this real quick while you respond. This is 23 July. Breached, yes. Trend day, no. The moment it was breached was and then 0.49. All right. Bitch. All right. Notice how Asia's midline wasn't breached, London's midline wasn't breached, and now we're going to see if this is the day. We're going to see if this is the kind of day we're trying to hunt. 9:30 opens up, midline's right here. That doesn't seem like it's calculating right. Midline's like right here. Just troll a fucking box. Right now, that blue line, or this Barbadell pink, is the midline. And it was never breached whatsoever, right? Indicating that all of these probabilities of the reversion of the mean, I don't give a fuck about, right? My job, knowing the time of day, that this is typically 9 to 16 trends in a direction, right? It's my job to use this midline as an area to tell me once we close above that, then yes, momentum has shifted. Until it does that, we trend. All right. Yeah, Odin, Odinan, I don't know how to say Odinanis. I'm sorry if I mispronounce your name. Like, I'm always bad with grammar, English names. So yeah, like I pay close attention to every session's midline. So this Asia midline, like I've got all the stats of when it's breached, that's from 1930 to 2030. This London midline is from 3 to 4, right? And I pay close attention to during this transition time from 8 to 9:30, 8:30 to 9:30, whatever, right? Did we breach, come back up and breach this? Because remember, for me, it's all about looking for the low of the day versus the high of the day. So if the low of the day happened here, or if the high of the day happened here, as long as that midline for this session and this midline for this session is unmitigated, then it's telling me that this gap down was the high of the day because momentum hasn't even been strong enough to shift back up. And on the 9:30, right, the fact that we cannot spend 1 minute above the opening price also tells me as this midline is being developed, not to pay attention to any longs, no matter what fucking anybody tells me. All right, so this is 24 July. Breach, nope. Trend day, yep. 2.21, no. 2.21%. Hopefully they explained it well for you, Odinado. See, another example. That midline, the white line, was never breached. Now London's midline got breached, which says look for a low of the day scenario. New York's midline got breached, and you can see how that day ended. So let's replay this one out. So right now, all of these have probabilities. All right, all the lower side of the Globex got taken out. The only ones that are left open is this low and this low, right? We breached the midline of London. We have not breached the midline of Asia. So 9:30 opens up. There's the midline. Still haven't breached it. There's the midline. There's the midline. There's the midline. There's the midline. Midline breached. Right? So now, if I'm doing distro trades, like my mindset's towards the upside. And my next target is the 9:30 open to see if momentum's truly shifting to take out these probabilities in the Globex session. It's all about decision making for me. All right. Preach, no trend day. Let me log this. '25 July. Preach, yes. Time 10:25. No trend day. And the moment it was breached, how far did we extend? 1.76. Still pretty good numbers right there. Asia left unmitigated. London midline unmitigated. London breached, and it looks like we've already breached 930. Breached right there at 935. And now we breached at 9 o'clock. Look how we stepped over and found support on this. Now remember, I told you guys, two types of days: trend days or V-shaped pukes. I'm calling them V-shaped pukes, but at the end of the day, it just means reversion to the mean, right? When I call them V-shaped pukes, like because like I see a V, this one's an upside down V and it pukes, right? But like I'm setting the conditions for this kind of day, which just rips your face off in a direction, versus this kind of day, and I'm using this 930 opening price in the midline to understand that, right? So right now, this Asian midline right here still is unmitigated, but it was tested, and we had a V-shaped puke. July 26th. Breach, yes. Trend day, no. Time of reversal, 950. .89. Yep, breached. That's what I'm talking about. Once that midline is breached, like it was here, once we swipe back and forth in 930 to 1030 in the midline, does it lead to a trend day or a V-shaped puke kind of day? That's why I'm doing this. Is the whole purpose of this was the return back to settlement, 1615, somewhere in that zone, and then just reversion to the mean for the rest of New York. July 27th, breached, yes. Trend day, no. Time of reversal, breached. 1020. After breached, what did we do? 0.92. Because I'm a market profile trader, so you use TPO charts, Bob? I love TPO charts. It's just TradingView and no accessible trading platform has them besides Siri, and Tradeovate has them, but I don't know, and NinjaTrader has them, but I shouldn't have to have a separate software that execute them. So this one breached it. So that tells me not to expect trend. We swiped up and down below that 930 price. And it tells me that we're going down for all this, but not to expect a trend continuation to the upside. Trust me, there's a lot of people in here that, like me, Jerry, we grew up in the market profile area. I love auction theory and market profile. Oh, this is definitely a trend day. All right. So this breached. First breach was at 940. Yeah, the 5.9 boxes. I love them. And Bob, one thing I'll tell you is, if you had this on a 30-minute chart, you should collect the data of how many times, once one auction takes the low out, how many times the top of that auction was returned to. Because these V-shaped puke days, I'm calling them, this is just value area being built, right? So if I had this on a 30-minute chart, you'd see A period, B period, C period, D period, and you'd see a typical bell-shaped curve, whether you use volume or TPO. I never can find the damn brush. Where's the damn brush at? Fucking brush. There it is. So like, this was a bell-shaped curve, right? That's what it would look like, right? This probably would be more of a P shape due to this area right here, but still, like, the value area would be from here to there. Actually, they're like right there, and this is the loop-de-loop. This is the holy grail that we're looking for. That's pretty fun. Highly recommend doing that on your charts. It's pretty fun. Yeah, like especially for me, got my master's in statistics, and everything I do in the markets have to have statistics to it. And so TPO charts are very, very good for me because it's kind of like the live price version of the statistics playing out. So I absolutely love TPO. All right, let me erase that. Get this off. All right, so this is 30 July. Was it breached? Yes. Trend day? Yes. Time of reversal. When it happened, it was 940. And then how far do we go? Which we breached 2.4%. Think of it like this. You only need 2.4% a month. I hate it when people say that. They're like, yeah, imagine if you did that. 1 minute. There we go. Let me get reset. I love when people say, imagine making $200 times 5, 5 accounts, 5 days a week. That's more than enough. And then it's like, yeah, but what about all the times I lose? Asia mids unmitigated. First step to a possible trend day. London mid unmitigated, right? After this session, it's unmitigated. Second step to a possible trend day. Third step, $9.30. Oh, I want the box. right there. There's the current midline. This trend is to continue and to ignore all of these stats down here. We need to breach this midline and continue on and get back over this 930 opening price, which is right there. All right, step one. And we're going to sit here and chop the IV. And now we can expect a trend day. No trend day. Until the afternoon session, and then we still ended up. That's not a trend day. Well, this is a trend day if you incorporate all the Globex, but I'm not looking for a trend day using Globex. I'm looking for a trend day. This is just normal profile stuff. All right. Good morning, Danny. Okay, so this is 31 July. Breached, yes. It was breached at 950. Trend day, nope. After breached, how far did we go? 1.4. Still pretty damn good. So all of these probabilities got ignored. Asia midline unmitigated. London midline, it's not time to see if it's mitigated or not. Now it's mitigated. Mitigated, so Asia midline is the only one unmitigated. Still haven't got the midline. Midline breached. So we expect a V-shaped puke. And all right, so look at this, right? So we know these all have probabilities of getting returned to all these highs, right? When do we stop and when do we manage our expectations to stop hunting those with our trades? This is what I use this midline for in this 930 opening price during the RTH session. Once we cross back over that with a close, I don't care about these probabilities anymore. Now my job is to pay attention to the 15-minute, because we know that once this 15-minute breaches right here, the low, now this 15-minute high has a low probability of being returned to. And we can expect that trend day. Jesus, little boys. This was a damn good trend day. Is this making sense so far? 2.3% day, dude. You've got to have things on the chart that are simple that allow you to make decisions. And then obviously, like if we put the captain's boxes on, like at what point did we ever breach the previous hour mid? At what point did, like we could have used the 5-9 box and continue trend trading, right? Right. So let's look at this from the captain box standpoint. Right. We know that we were trying to identify the 930 to 1030 mid, which is this pink Barbie doll. Happens to be at this point of violation, the not previous hour midpoint, we breach it, and then we get below the 5-9 box, and we start a trend. We're reaching up for higher probabilities, aka the 4:45 to the 9 o'clock highs, right? And then we reversed. These are the things we're trying to use all at once because we know the 1600 is more likely to be trend than the Globex session, which is more likely to be reversion to the mean. And we're waiting to see, is the 930 to 1030 going to firecracker all of these probabilities from the Globex session? But when this midline from 930 to 10 line is violated, we give up on those hopes and dreams of these probabilities, and we start trading towards using captain's box and 930 previous hour mid and 5-9 box to tailor our decision making. All right. 1 August. Yes. Yes. What time did this breach? 3% day. 3.69. Okay, moving on to the next one. Let me turn off this and put this back on. Yeah, so my biggest thing is having decision points that are simple and easy to follow so I can make decisions, right? So now we see that all of these probabilities from Globex are high probability areas of return. So when the 930 opens up, I'm going to be using that midpoint to see the midpoint in the 930 opening price. Is price above or below it? If it's below it, I'm ignoring this, right? If we breach it, then I start trading distros towards it. Right now, this Asia midline is unmitigated. London's been mitigated. And then we have all these probability highs that need to be returned to. So I'm waiting to see, does 930 to 1030 firecracker up to start wiping out these probabilities. Damn it. So let's rewind this. So right now, the 930 to 1030 midline is right there, Barbie doll pink. Breach. So now I'm saying, and we breached the 930 open. So two of the 930 to 1030 variables that I use to make decisions around just confirmed. So what am I targeting? All these probabilities up here. Until we breach this again. Just like that. Jesus Christ. So now we breached it again and we breached this 930 opening price. I give up on these probabilities. I have the captain's box on, seeing what the previous hour mid is, the 5-9 box, because we know the type of market 930 is. Here's the midline, Barbie doll pink. Now they're back in play. These probabilities are back in play. It's that simple. We know that this is going to be V-shaped puke day, right? That's what it is. It's already turned into that, which means I'm not expecting a trend, and we're just swiping back and forth. Boom. Puke, or as most people call it, range. Market profile people call it building a value area. ICT people call it high resistance liquidity runs. All right. I call it stupid. All right. So look, like your captain boxes would have told you you're in a range, right? Remember what I told you? When you see 5-9 boxes and midlines lining up and inverse 5-9 boxes, so this one's low, this one's high, this one's low. Like you know what type of risk profile you should have on and what type of expectations you should have for the rest of the day. Ooh, gap down day. Asia unmitigated. Go on and forget about this. This is going to the trend. No, it's a Monday. It might come back. All right, stop. All right, it's 9:30. Do you know where your kids are? Right here. So far as the 9:30 to 10:30 midline. This has been unmitigated, and Asia's unmitigated. This is the opening line right here. Opening 9:30 opening price. We're above it. We're above the mid. It continues to develop. London's mitigated. Midline held. Midline held. Midline held. 9:30 held. Saying expected trend. Where's that trend going? Maybe back to this gap right here. Maybe to the Asia mid. Who knows? Midline held. And V-shaped puke day. Right? Let me see. This is, yep, Sunday gap down day. Oh, this is August 5th. Duh. So right now, these probabilities are in play. 9:30 opens up. We're above the 9:30 opening price, which is right here. We're below the midline. We breached it and swiped. So right now, I don't give two shits about these probabilities right here. Now I give two shits about these probabilities right here. We're above the 9:30 opening price, which is right here in the midline. So I'm taking distro trades in that direction. Probabilities met. And it still held its composure of being a V-shaped puke day because we breached that midline. All right, I'm going to jump. Are there any questions? Do you guys understand what we did today and how you can use it. Was it beneficial? It's just something I'm testing. Let's do an after action review on today's class, right? Like, what was good about it? What was bad about it? Did you learn something? Was it insightful? Was it worth waking up early in the morning to attend? Give me something. What can I do to improve? Whether it's something dumb like my lighting or whatever, right? Damn it, 6:25 is about to hit. All right. Thank you. Can we get the Google Sheet to test this ourselves? Yeah, like if you go right here on your PC and you click on it and you hit Google. I don't have Google Sheets. I use Excel. But if you click Excel, and you open it up, and then like you just type in it, right? Like this isn't like I'm not even worried about this, right? I already have it. Personally, I love looking over the shoulder, so to speak of the great traders, see what they see as a narrative. I think we might be at a point where we hand out assignments and we work on something together as a team. We're gonna get to that, right, Bob? I want to ensure that people understand the workflow process very detailed first. Like the workflow process of building the statistical data first. Yeah, I definitely agree. The thing is, Bob, like what you can't get stuck in, remember there's multiple phases to this. You got the education phase where the guru just has you chasing your tail to teach you how these markets price, and usually that guru has absolutely zero market experience whatsoever. He's just some glorified YouTuber, right? And he probably hasn't even back tested the stuff himself. So you take whatever glorified bullshit that he teaches you, and now you're in the education phase. Most traders don't even leave the education phase. There's a damn community out there that just sits there and cult-like worships their guru of choice, and they're stuck in the education phase, and they're always going to be in the education phase. They have put all faith into this guru that he's done all the back testing because he's got 30 years of experience in the markets, right? But he has no data on it, right? Now you have a community out there that has actually left the education phase and gone into the testing phase. The testing phase is where you say, this is the education, this is the testing phase. The testing phase, right, is telling you, hey, what the guru taught you actually does or does not have edge. This is the expectancy ratio of the edge, blah, 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 blah. Well, that community who cult-like worships that individual is now stuck in the testing phase, right? So you have the education phase, the testing phase. Most people never leave these phases, right? And then the next phase is you have the risk profile phase, where you actually build the risk profile around the edge that you find on the screen, right? If you can make it to that phase, kind of like how Austin has made it to that phase, right, with the midnight snap and his distro trades, right, where he has risk profile built. He doesn't care about the education phase or the testing phase. He's already past that point, right? And he's now past the risk profile phase. Now his job is to enjoy the compounding phase. 99.9% of people never leave the compounding phase. And Bob, like I want you to when you get to the compounding phase, like I've gotten into the compounding phase with Captain Backtest, right? From 10 to 1600, right? And I've been trading it for 2 years now, and I don't breach the rules. I just follow them religiously. What we did today was I incorporated. I'm testing something that's going to even these captain boxes, the 5-9 boxes. That all was a development of how do I make my edge even stronger in the captain's phase. But I have to be very, very cautious about how much I test into it because if I add too much stuff, right? Then I'm overfitting the strategy, and I don't need a web of nonsense to make a decision. Should I place a trade or not, right? So I love that idea that you guys are eager to test. However, it has to be associated. It has to be associated with an exact strategy. And it has to be very simplified, et cetera, et cetera. I just went on a complete rant. My bad. And I just disrespected like 2 gurus out there. But I didn't name them, so it's cool. With all due respect. They'll dude, Google Captain Backtest. Like Tanya Trades did a YouTube video on it. Like it was 2023's hot trading style because it simplified ICT's silver bullet and DR's trading style. But it's a 3-step system basically. On a 5-minute chart, you highlight the previous hour H4 high and low. At 10 o'clock, whichever side we breach, now you wait for a 5-minute retracement. So let me show you. All right, so let's go to any day. So we already talked about how 9 to 1600 tends to be more trend than reversion, right? So right here is 10 o'clock, right? So let's rewind. Right? I'm going to give a quick version of this because I don't have time. So you're highlighting the low and you're highlighting the high of the 6 to 10 o'clock candles, right? And then at 10 o'clock, once you breach right there, 9:55, once you breach one side, now we know that we're only going to trade shorts because we breached this 10 o'clock low. But in order to get in a trade, right, on the 5-minute chart, and yeah, we'll use Barbie Doll Pink, right? And as now it's 10 o'clock, he gave us the direction. Now, for me to enter a trade, I need to breach a close below this pink line. So we know we're going to be sellers. So this is in a close, so I move my entry criteria down. So that's a close, right? So now I have momentum on my entry. Do you see how the 5-9 box helps you get better entries? Like we already know we're below previous hour mid and we're around the 5-9 box. So I have this 5-9 box to take entry on once this action has happened. And then obviously, like, you know how to use the 5-9 box. So, all right, I'm done. All right, is the captain box? Yep, 10-4. Oh, stop. Haha, kick their asses. Horrible cap. Don't do this. You're better than that. I don't know what you're talking about. Are you talking about how I just smack talking communities? I'm not smack talking. It's just like, it breaks my heart to see people stuck in the education phase or the trading phase and they can't get anywhere or consistently profitable because they're chasing their tails and they're constantly spending their valued time either testing or learning, and not sticking to the compounding phase of life. But I am going to jump